Hey there everyone, welcome to our weekly market review. Today, we're diving into a topic that's definitely been shaking things up worldwide, the tariff tensions driving market volatility amid the ongoing US-China standoff. I know, it sounds serious, but we're going to break it down and make it engaging. So, stick around because you won't want to miss what's coming up. Let's first paint a picture of the current situation. We're all aware that the relationship between the United States and China has been particularly rocky, right? Tariffs have been a major tool used in this economic tug-of-war. It's not just a matter of trade anymore. It has escalated into a complex web that impacts investors globally. So, how does this impact you and me? Well, when tariffs are imposed, it can lead to increased prices for goods and services. Have you felt those price hikes, especially on electronics or everyday items? Let me know in the comments what you've experienced. Now, as we zoom in on this volatility in the markets, you may have noticed fluctuations in stock prices, commodities, and even cryptocurrencies. A great example is how technology stocks react to fears of a standoff. If companies think that tariffs could hurt their operations in China, their stock price typically takes a hit. The unpredictability can be nerve-wracking for investors. Anyone here a little anxious about their investments? You're not alone! As we explore how the markets react, it's also important to consider the broader implications of these tensions. For instance, the potential economic slowdown that can arise from prolonged tariff disputes could be huge. Companies might scale back on hiring or investment, which we all know can impact job growth. This isn't just a distant issue, it can hit home for many people. But it's not all doom and gloom! With volatility comes opportunity. Seasoned investors often look for ways to capitalize on these situations. For example, some might turn towards more stable stocks, while others might see a chance to invest in sectors that could benefit from shifts brought on by tariffs, like agriculture or manufacturing. How do you feel about navigating through this kind of market? Are you one that plays it safe, or do you thrive on the thrill of potential opportunity? I'd love to hear your strategies. Let's talk a bit about China and how they're responding to these tariff tensions. Recently, China has indicated a willingness to take a stand of their own. They have options up their sleeve like retaliatory tariffs. This back and forth can create uncertainty in the markets. Have you noticed how news headlines can trigger wild swings in the stock market? It's almost like a game of chess between two economic giants. On top of everything, central banks are also watching these developments closely. Their decisions can influence interest rates and monetary policy. If a slowdown occurs, they might lower rates to stimulate growth. Conversely, if inflation rises due to higher consumer prices from tariffs, they may consider tightening policies. It's this continuous balancing act that keeps everyone on their toes. Remember, staying informed is key in times of volatility. Keep an eye on economic indicators, corporate earnings, and international news. The more you know, the better prepared you are to make informed decisions. And who wouldn't want to have an edge in the market? So, as we wrap up this review, let's take a moment to reflect. The US-China tariff tensions are not just affecting stock prices, they're influencing global trade, economic growth, and ultimately, you and me. It's clear we have a lot to watch as these updates unfold. If you found this information useful and want to stay updated on how these developments will unfold in the markets, be sure to hit that subscribe button. We have plenty more insights coming your way, and you won't want to miss out. Thank you for joining me today, and I hope to see you in our next market review.